This is a once-in-a-decade opportunity. One super growth stock down 70% to buy and hold forever. Typically, value hunting among stocks that have plummeted more than 70% at any given point in their history can be dangerous. History shows that winning stocks tend to keep winning, and investors are usually better off nurturing their winners and cutting their losses. However, there are exceptions to this rule. A value investor like Warren Buffett searches for stocks that are believed to be undervalued by the market or that aren't recognized by the majority of other buyers. Many value investors don't support the efficient market hypothesis, EMH, a theory that suggests that stocks always trade at their fair value. This makes it harder for investors to buy stocks that are undervalued or to sell them at inflated prices. They do trust that the market will eventually start to favor those quality stocks that were undervalued for a time. Buffett isn't concerned with the supply and demand intricacies of the stock market. He's not really concerned with the activities of the stock market at all. This is the implication in his famous paraphrase of a Benjamin Graham quote. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Now with this quite long introduction and lots of Buffett, now let's find out our undervalued stock today. Paycom, a leader in human capital management software, is experiencing a rare opportunity for investors. With its stock down 70% from its peak in October 2021, it's a chance to buy and hold. Despite the share price drop, Paycom's revenue has tripled since 2019. The company's focus on innovation and customer satisfaction has led to a net promoter score of 67, surpassing competitors like Paychex and ADP. This high score indicates strong customer loyalty and satisfaction, making Paycom a compelling investment. The introduction of Paycom's Beti payroll platform has slowed sales growth by reducing payroll reruns. However, this innovation enhances customer satisfaction by empowering employees to manage their payroll, cutting errors and saving time. This trade-off is beneficial for long-term investors focused on customer retention. Founder and CEO Chad Richison reported a 24% increase in units sold in the second quarter. Additionally, July starts are up 40% in revenue, signaling potential sales growth. With Beti's expansion into international markets, Paycom's growth prospects look promising. Paycom's robust financial position includes $346 million in cash and no long-term debt. A $1.5 billion share buyback plan further supports its stock price recovery. This financial strength, combined with a 0.9% dividend, makes Paycom an attractive long-term investment. By the way, it came to our notice that only 2% of our viewers have subscribed to this channel. This is quite disappointing for our time and effort. We highly appreciate if you consider to subscribe. Also, we noticed that 55% of our audience are female viewers. We are glad that our female investors show more interest in our content, but come on guys, come along! Market news, short and sweet.